Going on, everybody? Welcome back to another video. Today, I'm going to be jumping into technical analysis in the stock market. What that is going to be strictly candles, looking at price actions, how the candles look, how they move, things like that. Today, I'm going to be going over my trades on what exactly I did to have one of the best weeks of my life, specifically on trading. I do want to emphasize none of this is financial advice. I do want to mention this right here has taken me multiple years to get down. I have not mastered it, but I can see that I'm slowly starting to, grasp the concept on how exactly to trade and manage my risk by doing so, while doing so. I do want to mention that everything that I will be talking about today as far as trading. Everything that I trade is going to be a very small, tiny percentage of my overall portfolio. And the reason I do that is because you have to be willing to lose this money because it is more than likely probable for you to lose this money. Ultimately, what you're doing with trading is a calculated gamble or a calculated asymmetric trade, they call it. And that is just the reality. Trading is extremely challenging. It is something that not many people can do. And one of the reasons why is because you can easily enter a trade right now, for example, is 8:46 p.m. By 8:47 p.m., you could be down 30, 40, 50% of what you put into it. It is that volatile and it moves that quickly. Um, Pretty much the main thing about trading, I feel like is the most trickiest is going to be managing your emotions, right? If you're in a trade and it's not going your way right when you enter, you could be down 5, 10, 15%. You may be scared and want to sell, right? So you sell, you take the loss, just like that. As if it was flipped around and you were up 15% in a quick second, you may be like, oh no, it's going to go up another 50%. Let me hold on to it. And then it can easily reverse in just a span of 30 seconds, a minute, 2 minutes, 3 minutes. So this is extremely risky. This is not recommended to anybody starting out. Starting out, I always, no matter what, it's how I started, is going to be long-term investing, S&P 500. Just set it in an ETF, set it in a fund, pay yourself first. You guys already know the deal. It's what I do. Buy, hold, just buy, compound interest, let that do its thing. So that's the main thing. I want to mention that before you ever start to get into the trading, you want to make sure you have your foundation laid out. And the reason why I like to trade, honestly, is just because you're able to hedge against your portfolio, right? So example, long story short, I don't want to get it too deep into it, but if you're holding positions, but you want to hedge your portfolio from downside, you can buy puts for the downside, meaning that if the market goes down or that specific security or asset, if you bet that it goes down, it ultimately evens out the drawdown, if that makes sense. But anyways, I don't want to confuse you guys. I'm just going to go ahead and share my screen really quick to get to the point of this video. I'll go ahead and share my screen. There it is. Hopefully you guys can see this up top. Cool. Alrighty. So this right here is called technical analysis. So what you do with this specifically is going to be looking at candles. So long story short, I just want to kind of explain each candle right here, depending on the time frame, right? This is a 5 minute, 15 minute, 1 hour, 4 hour daily. Each candle is going to tell you a story, right? Just straightforward. So let's look at this green candle right here. This green candle tells you that it's green. There was buyers present. So this candle opened at 6/7/35/63. The high was 6/7/53/18, and the low was 6/7/35/63. The close, however, was 6/7/53/01. So you can clear by going over those numbers, you can see that this candle was nothing but buying. There was no selling. The candle may have dropped within that 5 minute time frame, but it closed very strong, which means that there is more buyers than sellers, right? So that's just kind of like a little a little thing to note when it comes to looking at candles, things like that. This video, I'll probably hold off on that. I'm going in depth on what exactly candles are and how they work and price action and volume and RSI and all this fun stuff. Today, I'm just going to be going over exactly what I did throughout the week to and what trades I took to then get to that number where I made roughly a little under $7,000. So, anyways, the other day on Friday, I think it was about 1,200 bucks that I made. So what happened Friday was there was a huge drawdown in the market. And a lot of the times, oftentimes about 95% of the times when there's gaps in pricing, typically they always fill. It does not have to be the same day. It does not have to be within a week. It doesn't have to be within 2 weeks, but eventually they fill 95, 90% of the time, right? So what I told myself is let me stay patient throughout the day. And mind you, this was after a huge dump. Let's go back from this area right here all the way down here. So, in my opinion, there was clearly drawdown for multiple days nonstop. In my opinion, I thought we're oversold. It's like sellers must be exhausted. There's just too much selling. So what I did is after that gap down, I decided to look for calls. And the reason I did that again is because I was anticipating once we went past this area right here that we were going to be going higher to fill the gap, right? So if we look at this specifically, right, imagine these candles weren't here, these right here. So before this happened, before this went up, this was completely empty, right? So as the day went on, I stayed patient. I stayed patient. I think that's key, number one, when trading. You want to stay patient. So when I started to see all of this buying just going up and up and up, filling this gap, I told myself, if this consolidates for a little bit in this key area that I marked 6, 730, and this is the area that I'm looking for, I'm going to look for a balance for some more continuation. Now, here's the tricky part. It's do I enter right away when the market opens, or do I wait for confirmation? You always want to wait for areas of confluence or just confirmation and confidence in your trade. So that's exactly what I did. I did not enter as soon as it broke. You always want to wait. My style of trading is always going to be the break and hold retest of that specific structure or level. And in this situation, it went all the way up to 6,746, consolidated for 5, 10, 15, 20 minutes before I entered at the retest of 6,730. I did play risky calls, their ODTEs on SPX especially. So those are extremely risky, extremely volatile. This trade took me probably, I want to say about 15 to 20 minutes that I was in the trade. I actually was able to exit like on this red candle. I did not want to continue holding. I was like, you know what? I'm already up. I think it was like 100 and something percent. So I risked, I think on that specific trade, I risked like 600 bucks and turned it into like 1,200, something like that. It was a little over 105%, something like that. And at that point, like I said, a lot of the times it comes down to your personal psychology in your mind, right? If you see that you're already flipped your money in the span of 20, 30 minutes, why exactly you're going to continue holding? And I think that's the trickiest part as a trader. It's like you want to make more. It's easy to get greedy when you see in 20 minutes you're up 6, 700 bucks, right? And same thing when it drops, right? It goes down and you're like, oh, it's going to recover. It's going to recover. The whole point of trading is you have to play or trade by what you see. And that's exactly what I did throughout this whole last week. That's one play that happened on Friday. I can go over this other play that I did. I think this was on Thursday. So Thursday, I did the same exact thing. I was looking for a continuation to the downside based off a 5-minute downtrend. So my previous trade actually was right here. I saw this right here, this downtrend. I think it was about, I can't remember exactly. I should have noted it down, but ultimately what I was looking for, it was a failure to go higher for more downside. So I entered, I can't remember. I know I entered like around right here. I know I was down on this specific trade like 20, 30% at one point, but I was just very confident in the trade. I continued to average down. And I think this one was probably the biggest play that I had for the week. I think it was came out to be like $3,300 win. And it was like a 300% return. So I went in a little heavy for sure. And this right here just marks a failure to go higher. So if you go to the 15-minute chart, oops, you can clearly see that it kept getting rejected from this area because you could tell that it flipped from an uptrend to a downtrend. So I was just following the trend. I was just waiting for that drop below that level for that confidence. And that's the white line right here at 6,775. And really, it was a tricky trade. I'm not gonna lie, just because I saw so much green so quickly that I like kind of panicked. I was like, oh my goodness, like I need to sell, I need to sell. And at that point, the reality was you need to stick to the game plan. You can't just because you see, you're up 100, 200, $300, you sell. Like you need to stick to your game plan. You need to have a game plan before you enter and stick to it. Simple as that. So, all of this, I'm still a work in progress. This isn't really my main thing to do. Like I've mentioned before, my main thing is going to be um, buy whole long term. Simple as that. And that is the winning way. That is my 99% is going to be long-term hold. That is the way to win. This video, I just wanted to jump in really quick, kind of show you exactly how I entered the trades. I hope it made sense to most people. I think it is confusing if you've never heard or seen charts before. You're like, what am I looking at? What does this mean? This and that. It takes time to learn all this stuff. I've been in the stock market for about 5 years now, and it's slowly, finally starting to click. I have lost more than I've made money trading. So I do not recommend this at all. I said it in my video where I lost 15,000 that this is not something you want to rely on. This is really just something that you want to either hedge, use as hedge, or really just take on more risk, right? If you like that more risk it's not even investing, it's just trading, you know, risk a small tiny percentage of your portfolio. So, anyways, I hope you guys enjoyed this video. If you guys have any questions whatsoever, comment down below. And if you guys like videos like this where my brother and I jump into specifics on trades or investments or companies or things like that, we definitely appreciate some feedback on what you guys think. But yeah, you guys have a wonderful night.